It all started last night when China came out with more stimulus measures. Then we have the DOJ basically crashing this one stock at a time when we see the jobless claims sink the 4-month lows. So is the Fed going to be able to orchestrate a soft landing or not? As we look at the fear and greed index, we are almost back into extreme greed territory. Will the news tomorrow be enough to push the fear and greed index back over into extreme greed? Or are we about to see the core PCE price index, which will be released at 8:30, show that inflation is on the rise? Now, I personally think it's going to show inflation is starting to come down. Why? Because I think overall, we have a worldwide slowdown in the economy, which is exactly why China is reportedly giving out more and more stimulus. You might say, Mike, what in the world are you talking about? Well, look at last night. The NASDAQ went ripping all the way back up, and then the New York Bears came and slapped it back down, and we closed somewhere near the middle of the range. However, a lot of this is going to change tomorrow, but first, let's come over and take a look at super microcomputers. And we can see right here, it's reported that the Department of Justice is probing SMCI. And if we look at how that stock actually performed today, we can see it was down 12.16%. We look out here on the 5-minute chart and you can see once that started to take hold, just down the market goes. And when SMCI started to tank from that DOJ probe, that's also when we've seen stocks like Nvidia starting to come back down and give up that morning gap. We also seen Meta this morning gapping up only to roll right back over and give up the gaps. Now we look at how the indices fared across the board. The Dow was up 260 points. The NASDAQ was up 108 points. S&P 500 was up 23.11 points, with the Russell 2000 being up 1.14 points. Now, when we look at advancing issues versus declining, we can see we had 66% of issues advancing on the day. Then when we come over and look at the sectors, we can see basic materials leading the way. However, the laggards out there, energy down 2.09, followed by real estate. And if we come over and we look at energy, more specifically, we take a look at crude oil. Now, I know I got a lot of drawings on this chart. Let me see if I can clear some of these off just a bit. We're talking about this during the live stream today. And if you want to make sure you don't miss out on the next live stream, make sure you're subscribed and you have the bell notifications turned on for all. But we've been talking about this for quite some time. We had this prior support line, then we drew a horizontal line across it. Once we were able to regain it, we were looking for the market to come back and retest this structure breakdown point. Now I'm looking to see, will we set up an ABC pattern that could take us right back over to this high volume area on the composite profile? Now, one of the things that we need to do is grab the Fibonacci retracement tool, measure from the swing low up to the swing high. Now, anywhere between where we are now and even as low as the 78.6 level, I will still consider if we start to turn at these levels for the ABC pattern on the way up. Then if we grab our Fibonacci extension tool, and let's just role play this out a bit. If we go ahead and we turn where we are now, that would bring us right on the other edge of this high volume area. However, if we dive down to the 78.6, we can see that brings us right here towards a high volume node. Now you might ask yourself, why was oil down? Well, very simply, Saudi Arabia was the blame for that. Oil extends 2-week low after reports, Saudi Arabia to scrap price target and go ahead and boost output. Now, this is a classic sign of when economies around the world are starting to weaken. They're starting to see, you know what, there won't be as much demand for oil. Let's go ahead and push everything out on the market as soon as we can. Then we look at some stats real quick. We've been told that September is a very bearish period of time for the markets. Well, you know what? It really hasn't manifested at this moment. However, this stat could be the one that could be holding true moving forward. And that goes on to show when the S&P makes a 12-month high or an all-time high in the month of September, look at the results that we have. Then we go ahead and look at what the results are from October through December. And we can see out of those occurrences, 29 times, 25 of them have been bullish. 4 of them have been bearish. And more specifically, pay attention down here, 3% moves or more. Every time we've had a 3% move or more October through December when this has occurred, it has always been to the upside. So if you're a bull, this could give you a little bit more confidence moving forward. Now, if we look at the most recent investor sentiment survey, we can see we dropped down just slightly from the week before, but all intents and purposes, it's pretty much exactly how we were. Now, if we come over and look at the SPX real quick, which is going to be the S&P cash, notice what do we do today? We made another new all-time high. When we look at the candle, we actually close with a hammer candle in the rising uptrend. This could be considered a hanging man candle. It's one of the weakest of all reversal patterns. Then as we dive down and we look at the SPY real quick, we have that same very candle. We see the MACD indicator right now is not showing any signs of weakening at this moment. If and when we start to pull back, watch out for this high volume area down here at about 562.01 and the gap right down here just below that to come back and get filled. When we dive down and we look at the 1 hour chart, MACD indicator still basically flattened out. And you can see today, we basically came down, filled the gap, and then boom, bounced right back up. Out here on the 30-minute chart, what do we got? Well, we can see that we have the volume profile levels. We're basically closing right near the point of control. But if we look on the edges of these profiles, we have huge minus development areas, which would be susceptible for the market to come back and potentially retest. Maybe the news tomorrow will be what it takes to push the markets lower, coming back, potentially testing out some of those price points. Now, to remind everybody, Apex still having a massive 80% sale off all their valuation accounts, lasting as little as 1 day, and only $85 activation fee across all account sizes. If you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Now, we look at the futures markets real quick. You can see we've kind of had this consolidation with an upward leaning bias, and now we've broken out. Are we going to come back in here, potentially start filling some of these high probability targets that we have a little bit lower, or are we going to continue to move on higher throughout the rest of the year? We come over and look at the daily profiles real quick. You can see we're closing right near the point of control with value area high being up here at 5812.25. We have the point of control coming in at 5802.25 with value area low being down here at 5789.50. Now, for all intents and purposes, we can see we had that nice hammer candle coming in today right near the lows. And when we pull a Fibonacci retracement, we measure high down to the low. Notice we basically come right back to the 50% level. Now, if that's all we're going to retrace on the way up, meaning we don't go any higher from that price point on, then we can go ahead and grab our Fibonacci extension tool. Measure A to B equals C to D. That would give us a price completion down here about 57.56. That would be just down towards the bottom of kind of this upward consolidation that we've had over the past couple trading sessions. Now, when we come over and look at the Dow Jones real quick, we can see yesterday we had that big bearish candle on the way down. However, today was nothing more than an inside day. The high from today's candle was lower than the high from the prior day. The low was higher than the low from the prior day. MACD indicator is not showing any signs of weakness yet. However, on the 4 hour chart, it's a little bit different. We've already had a bearish cross of the MACD indicator, but for all intents and purposes, we're doing nothing more than consolidate up here at these upper level prices. Then out here on the 1 hour chart, we've already come down towards the zero line. We started to get a bounce and we did not come back and fill the gap today. Now, tomorrow is going to be a whole new day. Maybe tomorrow we'll come back and test out that price point. Now, when we look at the volume profile, notice today is going to be a D as in dog shape profile. Given the fact that it's a D-shaped profile with the fact we had an inside day, expect a breakout or breakdown from this pattern. Now, we talked about the PCE price index coming out tomorrow, but let's not forget at 10 a.m., we also have revised consumer sentiment and also revised inflation expectations. On Friday, if they get a trend established in the morning and it's still intact after lunch, watch out. That could be a huge move going into the close. Now, as we come over and look at the small caps real quick, what do we got going on? Small caps probed a little bit higher, boom, closed near the lower end of the session. However, they were still able to eke out a gain, $1.16. Out here on the 30-minute chart, what do? Well, we gapped up today. We did not come back down and fill the gap, but what we did do on that move up, we did fill the gap down from yesterday. So is that all she wrote? And now we're going to go ahead and resume the downturn. Now, when we look at the QQQs today, keep in mind, we do have ABC patterns above us. 510.20 would be the completion for that for the QQQs. Now, when we look, we also have a gap right down here at about 471.33 that still needs to come back and be filled. On the 4 hour chart, it looks like the MACD indicator is getting close to wanting to cross down, just not there yet. On the 1 hour chart, you can see today we basically came down, filled the gap, and now we came right back roughly to the middle of the range. Then when we look out here on the 30-minute chart, what do we got going on? Well, 30-minute chart, you can see that value area high and low from today's profile is above yesterday's range. Yesterday was a D as in dog. We did get range expansion today, but is this all she wrote? Was this a little bit more of an exhaustion type of move that we saw last night? Now, we come over and look at the 4 hour charts for the futures markets. What do we got? Well, notice we're right here near this high volume area off the composite profile. Also, we're right now currently above the weekly developing value area high. I still think at some point we're going to revisit this area down here. I just don't think it's going to be this week. Now, when we look at the daily profiles all day long, we were talking about this on the live stream. I want to see 20,184 get tested. Well, you know what? The market said, shame on you. We are not going to test that level. We came within just a few ticks. Now, during the live stream, I also warned traders that when we get just a few ticks away from hitting a point of control and we do not feel it, keep in mind, if we continue to push up higher, it may be several days or even weeks before we come back and revisit that level. Now, when we look at value area low, that's going to come in at 20,191.25. We have the point of control up here at 20,346.75. And we have value area high right up here at 20,398.25. Now, if we can get above value area high tonight and we start coming back down, I'll look to play the rotation down in terms of the point of control, but then I also want to target right down here at a price point where this node is at about 20,275. Anything below that, look to target about 20,255, then value area low, and then all the way down here towards that untested point of control.